Welcome to the Mills Knows Bills podcast. My name is Mills Bender. I'm the founder and CEO of Mills Knows Bills, where we help you, variable income earners, master your money in 90 days. The point of this podcast is to help you make the most of your fluctuating income so you can stop living paycheck to paycheck, pay off your debt twice as fast, and get on track toward reaching both your personal and professional financial goals. Now, as I continue to grow my team here at MKB, you may have some guest hosts from time to time. However, our goal does not change. Whether we're bringing in a guest speaker, having an in-depth conversation about our personal finances, or talking about a topic that is of interest to you, our goal is to help you master your money. Hello, MKB fam, and welcome back to another episode of the Mills Knows Bills podcast. I'm your host as well as CEO of Mills Knows Bills, Mills Bender. And with me today, I have an amazing guest. His name is Brett Childers, and he's going to be sharing all the information around commercial lending that many business owners struggle with. And so we're really excited to pick your brain, really excited to have you here and just have a fun, organic conversation. Before we kick it off, do you mind introducing yourself and sharing a little bit about what you're doing? Because you have some exciting changes going on.
Yeah. And thank you first for having me. And it's a pleasure. Again, my name is Brett Childers. I've been in commercial lending for over 24 years. Started out as a personal banker and worked my way up into the commercial side and really enjoyed that level of business. I've transitioned my career, starting a new business, doing consulting for credit unions and small banks to build out their commercial and small business sectors, sectors, and really focusing on that in the new year. So I'm in the transition period of building the blocks with that. So
it's very new. You started making this transition to your own
late
consulting October,
late
right?
October,
okay,
yeah,
late October.
And so,
it's crazy.
And previous before that, I was working as you know, I was overseeing all lending for a credit union here in Orlando, which would be consumer, residential, commercial, and small business. So I was honored to have that, and now transition in something I really have a passion for.
Yeah, and so having 24 years of experience and being high up in that credit union, you're able to see a lot of different segments of lending, and you get to see it from a perspective that the everyday consumer doesn't typically see, let alone the business owner, right? Yeah. And so with that, what are some of the most, let's just start with easy questions here. What are some of the most popular loans that you would oversee from a business side?
So obviously real estate loans, equipment loans, lines of credit, just anything like that is the most popular. But I think what the biggest problem with small businesses is where to start.
Yeah.
And to transition into that. And so pairing yourself up with a person like yourself, a business consultant that can guide them to a good lender or a good organization that can lend those products is 3/4 of the battle. Yeah. And the real estate products, that can be investment, that can be owner occupied. So that's that equipment, that could be vehicles, that could be actual manufacturing equipment, and then lines of credit for cash flow purposes and stuff like that. So,
yeah. So there's a lot of different options out there
100%.
For the business owner. And you touched upon something in your statement, which was, pairing yourself up with the right people to help you get there.
That's right.
What are some of the common issues that you would see from applications or from business owners when they were inquiring with different financing?
Yeah. So I always had an expression that I don't waste time or money, right?
Yeah.
And so first of all, does the business have the juice to get a loan? And do they know that up front? And then the person that you're working with, do they know pretty much in up front, do they have the time or the wherewithal to get a loan? Yeah. The biggest thing in my life is time, right? And so I can pretty much within 15 minutes of a conversation with a business owner, just pretty much know if they can get a loan or not. But the challenges that they have, they may not have that expertise, which may put them through that rigmarole. And just to go 30, 60 days of, trying to get a loan and then saying, oh, I can't get it. Right. And so, and it depends on the loan that you're trying to go after. I mean, real estate, has a lot more to it than say like a line of credit, because you have your appraisal, you have, the environmental that you have to look at on that. But, again, pairing yourself with somebody that has expertise in that. And, I was discussing with somebody earlier, that person also having the ability, even though on paper you may have the ability to do it, but tell because it may over leverage you.
Yeah.
And it may put you in a situation and then get you in a bind where you can't grow anymore.
Yeah.
You're kind of just sitting there, idle, and so sometimes if you wait that extra year, and then you can do multiple steps later. Right. And so if you're paired up with that right person, they can guide you and tell you the right thing to do at that given time. But some people don't like to be told no either.
No. And you actually have a great story on that you told me a while ago with a medical practice. And I'd loved for you to share that story with everybody in just a moment.
Yeah.
You mentioned earlier that you need to know the juice, right? You need to have the juice. And so the juice is different for every single loan program.
That's right.
But they all have similar components, similar ingredients, right? Regardless of the loan program. So what are some of those common components that the business owner needs to be aware of? Because frankly speaking, many business owners have their business because they're great at their trade or their craft.
That's right.
They don't understand the financial jargon.
That's right.
So let's kind of give them a little bit of that juice ingredient 101.
So the number one ingredient of juice is debt service, being able to service debt. And that's all expression of cash flow. Yeah. Right? Do they have the cash flow to afford the debt that they're proposing to take on, be it a property or a line of credit or whatever? That brings up depending on, there's so many loan types. I mean, you have your residential, you have your SBAs, you have all those types of loans. Yes, you have your SBA 504s, you have your SBA 7As, and they all kind of do the same thing, but then they all have different components to it, and they do different things. And so knowing that, also knowing your client and what you put them into is also an art in its own right? So, like an SBA 504 is a real estate loan for a primary resident, for their owner occupied, right? And that gives them a larger loan to value versus a conventional loan that will only go up to a certain amount, but less than the SBA 504. But then what's better for that client? Is it better to go conventional or better to go SBA? SBA has a little bit more rigidity in the underwrite versus the conventional. And so if you want to get the more LTV, you may have to show a little bit more. The conventional may be a lower, easier way to go, but you lose the LTV, the additional LTV to get it.
Yeah. I can see why you were so high up in that credit union. You're well versed, and it's a process that's overwhelming for a lot of business owners.
That's right.
And so it's critical then that they work with somebody that is as educated as you are, has their best interests at heart. And so can you share that story? Are you allowed to share that story?
And I'll obviously not in names, but, a medical practice, rather large medical practice, here in Orlando. I banked them for many years, came to me and said they wanted to open up another location. On paper, they could afford the loan, but it put them in a leverage spot. And so I said, no. Well, again, on paper, you could take that to other banks, and on paper, they'll do the loan. And the point was, the reason I said no is because it would tighten their finances so much that if one thing went wrong, then they'd be kind of in the hot seat.
Would it work?
And so in this case, it actually affected their payroll. And when you're talking about payroll, you have people that work for them, and where payroll wasn't available to them. At that time, I had the ability to offer a signature loan to help them get to their payroll. So I'm sorry, I skipped over a little bit, but basically they took the loan, went somewhere else, took the loan.
Yeah.
Not more than, I think 4 or 5 months later, they started getting into the quick, right? And they weren't able to meet their payroll needs. And so their payroll was rather large, multiple locations, and in medical, the salaries are higher.
Yeah.
And so they needed, I get a call, Brett, I still was, managing his banking relationship, but he needed a loan to pay this payroll. I said, yeah, the first time I'll do it, but you're going to tell me how to pay it and how quick you're going to pay me back. And of course we got them the payroll done. I said, the next time you do it, we're going to have a real conversation and we're going to really talk about it. Well, months go on and I get the call again for payroll. And, I said, I gathered up all his finances and and when he called me for that, I said, I'll be down in your office in 15 minutes. He said, I got patience. I said, this is the most important conversation you're ever going to have in your practice. And the point is, we got him out and I'll never have, that client will always be mine. But the point is that there's a lot of order takers out in the business that don't look at the business as a whole and the health of the business. And to say that no, it may upset you. But your business, in this case, he's a medical doctor, that's what he does well. He does not a good business person, right? Yeah. And so in order to say no, I'm trying to save him from heartache down the road. Yeah. And then once we got him all settled out, but again, there's a lot of order takers. There's not a lot of people that look, cause there's, as there's planning, 5 years, 10 years, 15 years, hey, I want to sell my business at this date. What do I got to do to do that? And so you got to have that real understanding of how business works and how those, individual businesses work, because every business is different. Right. And so what I really pride myself on in being in the position I'm in, that I've been in, is that I've seen all walks of business. Yeah. I've seen a lot of different business, from logistics to medical to whatever. Just understanding how that industry works, how they get paid, because that's important. How they get paid is one of the most important things. And just understanding their cycle, their business cycle, and able to lend to that. And, you're always going to have loans that have trouble, but able to keep a large portion of the business really in good standing. So
I think it's important for a lot of business owners to understand, just because you can doesn't necessarily mean that you should. And when you're told no by a trusted professional like Brett or myself, somebody who truly has your best interest at heart, it's not because we want to be mean. It's not because we don't want to see you grow. It's actually the quite opposite. We want to see you grow sustainably. And those no's are actually making space for a far better yes in the future.
That's right. And if you look at it in this regard, in my space, I don't get paid unless the loan closes. Right. So the power of the no.
You really had their best interest.
The best interest in their mind. And so, it's not, a halo, but again, I look at it in terms of, I want to partner with that business for life. I don't want that one-time transaction, nor do you. And so you want to have that long-term relationship. If you get them into the wrong product, then they're always going to blame you, right? And they're always going to say, well, you told me to do this. Well, I give you my best advice. But if I'm saying, something like a loan, that's not a good thing, then it probably isn't. Yeah. But again, so there's so many things, but the power of yes is so wonderful. One of the better loans that I do is even construction, right? Is taking somebody's dream of a new property and financing that and going through all the process, which is a lot of work on construction, going through a construction deal. And then when you get to the final ribbon cutting, and then just how much work you put into it with them. Yeah. And again, you develop bonds and stuff like that. So those are some of my favorite products, but, lending is the workhorse of business. It helps out in a lot of ways. Managing those dollars, it's also a nuance, getting a line of credit. How do you manage that money properly? How are you just throwing money into something that you probably shouldn't do? Or are you going to manage? So when I talk to a client, they're asking me for a line of credit. What are you going to use it for? Mm-hmm. What are you going to use those funds? What kind of plan? How are you going to
get the return on investment?
How are you going to return on investment? Those things are very important. And so, so that's why I love my business, right? That's why I love what I do. Now, shifting on, since I built out commercial and business side, that's what I want to do in the future, is help other credit unions and small lending firms build that side out, because the bigger banks, which I worked for too, they pretty much cherry pick their deals.
Yeah, they
and
do.
The smaller banks, those credit unions and those smaller banks are so necessary for the small business to have access to lending, that they're a little bit more nimble than the bigger banks are, because they can just they could do sheer I guess they just have such a broad swath of clients that come in. They could just cherry pick what they want. But some of those smaller businesses are gems, and they need to be, maybe we do something here this year, but then we don't have that problem in the future, as long as we're guiding them the right way. And that's where I really fell in love with the small institutional banking. And that's why I want to spread as much as possible that the ability for those institutions to do that, because they traditionally have mostly focused on retail banking.
Sure.
And that side's dying, right? The online presence and so many banks that you can just take the retail and the regulatory that goes into that retail side. If credit unions and small banks don't go to that small business and commercial side, they're not going to last. They're either going to get gobbled up or they're not going to last. So,
Well, you're also making an impact at the root of it as well, right? If you're able to help all of these smaller banks and institutions and credit unions build out that lending arm, then they're able to impact and help a lot more small business owners, right? So you're spreading your impact, which I think is really cool.
Well, think about it. You're taking someone's dream and trying to help them do that dream, right? Yeah. And if you take it seriously, and I know you do, I know 100% you do, that if you take that seriously, it's nothing better, right? And I tell a lot of people, I'm never going to be a billionaire or millionaire or whatever, but I've helped a lot of people do that.
Yeah.
And that's a powerful thing.
It is.
And, again, a lot of these clients, they become your friends and you, always have a line, but you're friends and you care about what happens to them. And I think that's what we're here on this earth for, is to help each other and, try to grow.
I had I have a student from UCF who's shadowing me, and she was shadowing with me at my house yesterday, and I had to call one of my clients, and we're, chit-chatting, hanging out, and I hang up. She goes, "Oh, is that one of your relatives?" I said, "No." We've just gotten to that level.
How's Jimmy?
How's your children?
Is he teething still?
Yeah.
I gotcha.
No, but it's fun, because then you get to, you're not only making an impact, but then you get to do life and business with people that you enjoy. And you know that you're making an impact, not just professionally, but personally, which is really, it's an honor, honestly. But let's go back to the juice ingredients. You talked about, no, it's good, because we talked about debt service, ability to repay it. Sometimes a no is actually a better yes, which I think is great. Debt service is one of the ingredients. Yeah. What's another ingredient of most loans?
So typically we want to see 2 years in business, right?
Okay.
So the reason for that is that we want to see how they perform financially over 2 years. That's where you're going to get your debt service. So, and depending on your loan or what you're trying to do, we want to see kind of your gross sales, right? And so, your tax returns will show us trends. Are you spiking one year and then really going down another? What's the reason for that?
Yeah.
So sometimes we'll ask for 3 years to see that trend. And then again, in understanding the industry itself and the cycle of that industry. So I'll give you an example, logistics. At one point it was booming in the economy.
Yep.
Then after post-COVID, it took a lot of hits, and then now it's starting to come back around. But through that period of time, people got hurt. So understanding the economy, understanding the industry that you're working in, and having somebody, again, that understands commercial and understands business, how to present that person or that business to an underwriter. And if they can understand your business, then they put that bow around it and then present it to the underwriter. The underwriter will say yes. So,
sounds like there's a lot of internal and external factors that are really taken into consideration.
Yeah. So when I'm looking at a deal, obviously I look at the business returns, the personal returns, where they're at with their debt. We look at the personal credit. 99% of the time, there's a personal guarantee that's going to be required on all commercial loans or small business loans, unless you're like really big or, What
about building your own business credit though?
Well, again,
could you avoid some of that?
Well, you can if you get big.
Okay.
The problem is with the credit crunch that we had previously, really brought in the personal guarantees into the business. So, and again, it's going to get a little bit more tight too, because I don't know if this is a proper place to talk about the economic forecast, but credit's going to get a little tighter. We don't know what's going to happen, coming into this new administration or whatever. But I know that governmental spending is going to be cut back. And I think we're on a kind of a juiced up economy from governmental spending. So when that cuts back, what does that look like? It's going to take some time to whatever.
Yeah.
But anyway, with that, what I'm seeing currently is unsecured loans are starting to be cut back.
Yeah. Okay? I've seen some clients whose credit limit just automatically decreased.
Even home equity lines of credit, right? Where they're saying they're cutting it back. So if you're talking about personal guarantees, they want those more in there. So it's going to be more part of that. You can build business credit. I can tell you this, in the time that I worked in commercial, I probably maybe 5% didn't have a personal guarantee on it. And that's working for big banks, all through credit unions. You really either have to be a nonprofit, a nonprofit, corporation, or really, really big, where I know that you're going to pay this debt, no question, because of your debt service is just rocking, So you really have to have that. The personal guarantee, most underwriters want that, just because it puts the hooks in. Yeah. Because what if you walk away? And, so there's that.
It's interesting. In a lot of my circles, they've been talking a lot about business credit lately and building it and completely separating the debt that's meant for your business from your personal lines of credit. Don't get me wrong,
right? So your personal guarantee is just saying that, hey, I am going to cover my word if it, but never does business debt ever show up on your personal credit.
Okay. Interesting.
As a matter of fact, when we look at your personal credit, I pull one bureau, not three. And so basically, based on that, it's a soft pull. And we're just seeing that you're meeting your obligations. And then I'm getting a little bit of your debt to income on that back end and blending it all together. But business credit is in my opinion, is nothing short of debt service coverage. Can you afford the debt? And do you have at least 2 years on the books where I can track your business and afford the debt? And from there, if you're, doing, 10 million in sales and your net income is, out of this world.
Yeah.
And you can afford your loan, and you have track history.
Yeah.
That's how it is. There's not a bureau for a credit bureau for business. There's Moody's, but that's very sparse, but there's not like, a TransUnion or stuff like that. And they're trying to get there, but it's again, I believe that commercial and business lending will always be, a feel for that business, a feel for the ownership and feel for that industry, and how you investigate that business is, and how you present that back to the underwriter. And that's where you'll get most of your positive answers.
It's interesting. There's so much information out there
there's a ton.
on financing and credit, and
we could sit here for 5 days.
Yes.
So,
but it's always interesting how little the business owner tends to know. About the whole industry.
Well, it's different types of lending, they're used to residential lending, right? I get a 30-year fixed mortgage, right?
Mm-hmm.
Well, in commercial, if you have a real estate, it's typically a term or a balloon
Mm-hmm.
and an amortization.
Mm-hmm.
So you have you can pick 3, 5, 7, 10, maybe 15, depending on the client. 10-year term with a balloon there with a 25-year AM on the back end.
Mm-hmm.
That's how it looks. That's
just
universally, it's just different.
Yeah.
And so a lot of people get scared of commercial or small business lending when they just don't know. But again, if you have the right person that knows and been around it and knows how to put you in the best light to get that yes, that's 3/4 of the battle.
Mm.
The business owner should be focused on, if they're going to get a loan, is they should be focusing on the documents that the person wants and who they select to get the loan with. They should do the running, let them run the business, and then we'll take care of the other side. And again, I go back to the same thing. You don't waste time or money. If in 15 minutes I have a conversation about your business and I feel like it's not going to happen, I'll let you know.
Yeah.
You know what I mean? Because of what they want to do. And then if I but then I want to see some documents before I submit. Okay, I can get this loan done for you.
Yeah.
No question. Here's your debt service. I'll calculate out. This is my write up on you. I go back from how they started, who the ownership is, business background, what the industry outlook is, their the debt service over years, breaking that out into, empirical data, and then my recommendation, and then all through that. So there's a lot to it, but, again, can't waste time, can't waste, money. So if somebody says, okay, I could do this loan, go ahead and put the appraisal money down, and then they can't get the loan. Well, you're out. Appraisal and commercial costs $3,000 around that. So you should know what you're doing before you get that loan done, so you don't waste that person's money, or keep a property off the market for somebody else to buy if that person can't buy it. Yeah. And so that's where you build your reputation, is knowing how to do stuff.
Yeah. Would you suggest that the business owner who's interested in getting financing talk with somebody that they can build a relationship with
100%
before they even submit?
100%. So if you want to look, say you want to buy a property for your business and you want to house your operation out of a building, talk to a lender first, make sure they know what they're doing, make sure that they give you, pre-approvals, letters. The other side of it is also, your real estate agent who you charge. Is it a residential real estate advisor, or is it a commercial advisor, or they try to do both? And, do they know what they're doing there? Because a commercial contract is going to look way different than what a residential contract, just on due diligence alone. There's more steps in commercial, because we want to look at the environmental side of it too, which will take longer, within that. So we want to say, have they dumped toxic chemicals on this property? Because once you own that property, you own the rights of that. So I will never finance a dry cleaner.
Interesting.
Well, because of all the chemicals that could leak in there, there's a lot of history on that, the chemicals. So when a dry cleaner comes up, I don't want that property because of the environmental impact that it have. Well, if they want
to, just harder to insure? Like what's...
Well, okay. So, no, because what if there's a spill? So what happens is that you have to go into a phase 1 environmental, which costs money. It's probably about, $3,000 to $4,000. If they find any traces of that, then they'll go to a phase 2, which is a lot more money. And then if they want to do core drillings, they'll go to phase 3 and go down and actually find out what it is. Well, the problem is that do you want to even inherit a property that has that problem? And does a bank want to finance a property that has something suspected of that? Yeah. Because what if you default on that property? Then it's the banks. And then then it's the bank's issue. And then we got to clean it up. I've seen it where people have bought buildings, and the next thing you know, they get a letter from the EPA saying, "Oh, you got to clean up something on that thing."
Happens. I mean, could you mitigate that risk by ensuring that that business owner purchasing that property has extra reserves in case something like that comes up?
Well, first of all, we're gonna depending on the loan amount. Mm-hmm. So anything over $1 million, I'm going to order a phase 1 environmental on it right away, and that will tell me everything I need to know. Okay, there's a kind of a desktop flag system that will tell us about environmental that's been reported in that area.
Okay,
I'll do that on every property. But if it's over $1 million, I'll go to a phase 1. The phase 1 will tell me anything. Now think about this: is why would I do that? I want to protect the small business owner too.
Sure.
You want to know what's on that property because you don't want to get that EPA letter saying, okay, you're responsible. Well, we didn't even know it was there. Doesn't matter. It's your property.
Yeah.
That's how it works. So if you have a dry cleaner that's sitting in there and that's been there for 30, 40 years, well, the EPA laws have changed so much that they have used those chemicals and there's some sort of leak in there that's contaminated the soil. You inherit that, you got a big problem on your thing. So when it comes to a dry cleaner, so there's some business, gas stations are hard.
I believe it.
Okay. There's stuff with that. There's stuff that we look at there. Yeah.
That's crazy. So for the business owner then that is, we're coming into a new year. Maybe they have some lofty goals. They want to leverage some financing to help them reach those goals. Maybe they trust you based off of this conversation. They want your advice before they pull the trigger on anything. How can somebody reach out to you to learn more about what they should keep an eye out for, tailored to their specific situation?
Yeah. And so just to tie into that, so I'm getting to the part in January 1, starting my own company right now. So I don't have the handles that I want to have right now, but you can reach me at 321-356-3860. That's my business phone, and you can call me anytime and we can talk. And
just because you're in this transition doesn't mean you don't have the contacts.
I do.
you have a wide breadth of a network.
That's right.
And so I think it would still be great for somebody to, get the pulse of where they're at and build that relationship with you. And especially as you're embarking on this new transition, is there any one final piece of advice that you'd like to leave the listeners before we close out this podcast episode?
Not really, but except if you surround yourself with people that really have your true best interest, that's gonna help your business. Focus on what you do and what your passion is. Leave the hard decisions that people, and trust those people are in those spots that know that business to help you with that decision.
Sure.
And if you can do that and kind of let go a little bit and trust, that will help your business quite a bit. And thank you so much, Mills.
Yeah.
So much. And I know how much you invest in your business. Oh, I've tapped on the thing.
It's okay.
That you invest in your businesses, and I really appreciate that about you.
Thank you. I think that's what we've really bonded over, is how much we care about our respective clients. And so thank you for coming on and sharing your experience with the listeners and the watchers. If you did not write down that number for Brett and you are a business owner looking to get tailored advice on your financing goals for 2025, his phone number will be in the show notes below. I hope that you reach out to him, get that one-on-one care that you're really looking for, so that way you can build the business that you dream of. Thank you for tuning in, and I look forward to seeing you next time.